We are going to. I'm going to hold Alex till after the break. No, I can get into it now, and then we'll hold him. We'll do the second part of the interview afterwards. Let's welcome the president of Jacksonville Wealth Builders, Alex. Pronounce your last name for me, buddy. I only know you as Alex.
Sifakis.
Sifakis, exactly how it's spelled. Why couldn't I get that right?
Butchering it earlier.
Sorry about that. I knew you were on hold. I was like, he's hearing me butcher his name. So listen, welcome to the show. It's great to have you. We talked in the last show a lot about Jacksonville Wealth Builders, and the response that we got was terrific. And so we said, hey, let's get the president of the company on the air, talk about what's going on down in Jacksonville and the good work you guys are doing. So let's start with that. Welcome to the show. What's happening in Jacksonville, Florida?
Well, first off, thanks for having me. I appreciate it. Love the show.
Thank you.
Right now in Jacksonville, Florida, we got a lot of exciting things going on. One of the biggest things about Jacksonville is here. It's a great cash flow market. So when you're talking about investing in rental properties, you can get great cash flow here because you have really low prices compared to the national market. Prices here are actually 26% lower than the national median, but you actually have higher rents than the national median. So, most of the time rents move kind of in line with home prices. If you have lower prices, you have lower rents. But here in Jacksonville, you have lower prices and higher rents, which from an investing standpoint is amazing because you can get really, really great returns on your investment. So,
now, do you have a theory, Alex, on why that would be? Why are rents rising faster than prices?
Well, rents are rising here, but even when they, even a couple years ago, the comparable prices to rents were still higher. And it just goes down to supply and demand, just like anything else that drives prices. In Jacksonville, 34% of the residents here rent, whereas Florida in a whole, 25% of residents rent. So you have a much higher demand for rentals in Jacksonville, which raises the prices.
Right. And I also know that compared to the rest of the state, you're about the youngest city in Florida in terms of an average age. It's like the early 30s is the median age in Jacksonville, which would account for some of that extra demand for rentals. But then you got the job base, and we were just talking to a caller a moment ago about a military base in Colorado that he's moving near. You guys have some military down there as well, don't you?
Yeah, there's two large military bases here, NAS Jackson, Mayport. So there's a large amount of military, which of course sometimes they don't know how long they're going to be here, so they rent instead of buying. And also there's four Fortune 500 companies headquartered here. So in addition to military and government jobs, you have a very vibrant private sector that brings in a lot of, like you said, younger people, young talent that is continuing to grow the population here. So.
Give me some of the big names of the corporations that are headquartered down there.
You got like CSX, Deutsche Bank. There's a lot of logistics and financial companies here. LPS, Lender Processing Services, has a large base here. So
the logistics, that's a good lead into the. We've had the conversation on this show about the Panama Canal, and I'll just do it real briefly for anybody who didn't hear it last time. Panama Canal is expanding, and the biggest ships, the cargo ships that are carrying the majority of the cargo from China and those countries over to the United States, they all land in California because they can't get across the Panama Canal. It's too narrow. So it's being expanded, and that's going to be opening in 2014. And the impact on the economies of the cities that have ports in the southeast U.S. can be enormous, and it looks like Jacksonville's doing the best job of all of those port cities at preparing for and courting all that new business. So what you guys are you seeing momentum already being created as a result of the promise of more shipping activity?
Oh, absolutely. There've been companies that are coming in here, large Asian companies like Mitsui, who opened the Trey Pack terminal, and a bunch of other ones that have been already expanding the port, getting ready for this, the Panama Canal opening in 2014. And Jacksonville had this problem called the mile point problem, where ships could only get into the port for a certain amount of time because of the tides, and we just recently got federal money to fix that problem. So everyone, we're expecting, enormous population growth due to the jobs that are going to be created by the opening of that Panama Canal in 2014.
Right. So it's fair to assume that maybe over the next 10 years that the rents will continue to rise, but also the prices are going to continue to rise. So the timing of getting in, what I try to get across to folks is the idea that there is a perfect storm going on right now where, yes, rents are rising because rental household creation is through the roof. Yours have been higher than normal all along, all right? But because of people leaving houses because of foreclosures and because they're selling their homes in short sales because they had negative equity, they still want to live in houses. And so demand for home rentals is through the roof. Home prices are still getting knocked down in a lot of places because of foreclosures. Mortgage rates are in the 4s. And in a place like, you take all those circumstances, they apply in almost every city in the country. Then you combine that with the economic development going on in Jacksonville, and what I see down there is the potential for your marketplace to see home prices double over the next 10 years, just because the population is going to increase maybe by 50% or more. So it gets such great marks in terms of analyzing a place to invest because of all those fundamentals. It's a beautiful thing. How long have you been down there, Alex?
I've been down here about 6.5 years, and I just want to say that we're already seeing home prices rebound here. I think the bottom was 6 to 8 months ago, in my opinion. March of last year to March of this year, prices are up 6.7% in Jacksonville, and it's partly due to the extreme amount of money that's flowing into Jacksonville from people who are looking to invest here because they see, the returns you can get, the cash-on-cash returns you can get from just buying properties, not even planning on appreciation, just hard cash-on-cash returns that you can get here because prices are low and rents are high is so amazing that we're seeing a lot of investment money flowing here and prices are already coming up.
All right, so the window is starting to gradually close on the best investment opportunity of our lifetimes, potentially. But you know what? Let's do some more of this after the break. Alex from Jacksonville Wealth Builders. We're going to talk more about some specific opportunities down there. You're listening to Rand on Real Estate on 77 WABC. Call us at 800-848-WABC. Back in 2 minutes. Welcome back to Rand on Real Estate on 77 WABC. I am your voice of reason in real estate, and we have a special guest on the air. We're going to pick up our conversation right where we left off. We are sponsored this hour by Jacksonville Wealth Builders, and we're very happy to have the president of Jacksonville Wealth Builders, Alex Sifakis. Got it right this time. Now, listeners, you should know, I know Alex. I just don't use his last name all the time. So we were talking about, we started off the analysis here of Jacksonville of what's happening and why, and what are all the reasons to believe that the market is going strong. One of the things I love about what Jacksonville Wealth Builders does is that you have answered you've cracked the code on how to lower the barrier of entry for investors all over the world, because you kind of invented the term turnkey investing. And so people, I hear it all the time. Yeah, Greg, I'd love to invest in real estate, but I might get a phone call in the middle of the night from a tenant. There's a leaky roof or something like that. That's one of your specialties, is that you're presenting people with an opportunity to own this fabulous asset class without worrying about that call from the tenant, right?
Absolutely. What we actually do is we're out there every day buying investment properties that are going to return great returns to our clients. And so we buy the property, totally renovate it, put a tenant in the property, then sell it to a client of ours who's looking for that long-term income-producing rental property that they want to own. And then we do the property management for them afterwards. So we collect the rent, we fix that broken toilet in the middle of the night, and we send the rental money to our clients. So all the client ever has to do is buy the property and then cash the checks that we're sending them every single month. We take care of all of the dirty work that goes along with real estate for them.
That's great. Now, when you guys do the renovations, I think it's noteworthy to talk about what you actually do, because you produce a house that you bought first. That's a very interesting thing, is that you guys buy them first, then you package them, and then you resell them to investors. You're not selling people a property that they're buying directly from the seller. You become the seller. And so you've actually taken possession of the property, and you do a couple of structural things to make sure they're up to speed, right?
Absolutely. And, we have to take ownership of the property because we're doing, heavy renovations to these properties. So we're not brokering anything and selling a property to our clients that we don't know too much about. We're buying them, and we're putting, sometimes $30,000, $40,000 of renovations into them: new plumbing, electric, AC, flooring, kitchens, baths, everything, so that our clients are getting a property that we feel confident in, that it was renovated the right way, and that, more importantly for them, they're going to have very low maintenance, costs going forward, because we've already done all the large-scale items, the heavy lifting up front before they even own the property.
Yeah, that's an important distinction there, the idea that they're getting something almost close to new. But you guys have actually created another innovation recently where you're actually building homes for use as rentals, right?
Absolutely.
Now, that I'd never heard of until I met you guys. So tell me what you're doing there.
I'd never heard of it either. We kind of just came up with it. So what we're doing now, we're actually buying lots and building brand new homes. And these are good-looking houses. They got brick front, hardy board siding. Some have garages, 4-bedroom, 2-bath homes, 1,400 to 1,600 square feet. So that we're building, putting tenants into them, and then selling them to our clients. And they're obviously, tenants love the properties because they're renting out so quickly, because when have you ever been able to rent out a brand new home?
Never.
And our clients love the properties because they're literally brand new. So your maintenance costs, for the next 10 to 15 years should be close to zero. So it's really been, it's kind of an innovation that we came up with, and it's been hugely successful recently. We bought about 80 lots in the last 6 months that we've been building houses on.
Wow, so that it's amazing, because you hear about other parts of the country where they built too many homes, and now they have a glut of supply. Like Atlanta comes to mind as one of the places that's still struggling through an excess inventory of newly built homes. You guys have now found a purpose. There are some people out there, I'm sure you've heard this, Alex, some geniuses out there who think the best way to deal with that is just bulldoze the homes. It's like they're already built. Why would you destroy all that economic activity by bulldozing it? Well, it's because I guess they teach that kind of stuff in Ivy League schools, that, what I call the 1-degree solution. We have a problem, too many houses, let's bulldoze them. That's a great solution. All right. You guys are actually building them to rent out. Now, that house you described, 1,800 square feet, 4 bedrooms, brick front. How much is that? What is that worth in today's market? How much would you sell that to an investor for?
We're selling those to investors for between $90,000 and $100,000. And they rent out for $1,050 to $1,200 a month. Just to give you some idea.
So that means that, back of the napkin math, that means somebody's making about a 10% return. They're buying a brand new house, or even if it was one of the ones you renovated, practically brand new house, putting down $100,000, getting $10,000 in profit a year, 10% return on that property, and that's not taking consideration at all the fact that property is going to appreciate. Florida real estate does appreciate, especially after the hard times it's gone through in the last few years. And so when you do the math, and I send people to ownamerica.com to use our calculators, because when you do that math and say, okay, I'm satisfied with a stable investment at a 10% return, but what if I get 2 or 3% appreciation per year? You compound that over time, and your tenant is paying your mortgage off if you have one, you're looking at 18, 19, 22% returns on what is an incredibly stable investment. That's the whole point of this show, is to get people to understand that the more you really know how real estate works, the more you realize you're crazy to put your money anyplace else. So, Alex, tell me the kind of people that you must get a lot of out-of-town investors because of the turnkey nature of what you do. Describe some profiles of people that work with you guys.
We do have a lot of out-of-town investors. We currently have clients in about 26 different states and 8 different countries. Our typical client is 35 to 40 years old. They're busy professionals, doctors, accountants, executives, people like that have busy personal lives, and they want to spend their free time fishing or snowboarding or spending time with their family, not worrying about, their investments. So they want to invest in real estate. They don't have the time, so they come to us for that. We have a couple of our clients. I can give you some, just actual examples here. Joe and Jang Dela Cruz, some great clients of ours. Joe's an engineer. They bought their 3rd property from us a little while ago. Their first 2 properties, they're getting $300 to $400 a month cash flow from every month. Joe used it to pay for his car payment, his gym membership, his iPhone bills. So all that is basically free to him now. And the 3rd property is actually paying for their daughter Mia's college education. So she's paying their Florida prepaid payment every single month. So.
Well, I'm glad you said that, because I'm a big believer in what we call compartmentalized investing. All right, there's a lot of people who get a lot of bad advice. We talked in the first segment about the numbskulls that get on CNBC and talk about the housing market. There's a whole other category of lousy advice out there, and those are the guys you find if you're if you have insomnia and you can't sleep, and so you turn on the TV and there's a snake oil salesman on the hood of a yacht talking about how you can be rich like me with no money and no credit, no problem. I'll teach you how to buy properties at half their value. There's so much bad advice out there that we want people to understand the right way to do this is don't go about this with the expectation you're going to buy a property for 20 or 30% less than what it's worth. It's not really out there, okay? I mean, yes, you can get a foreclosure from a bank, but the truth is there's a lot of people ahead of you in line for that. People don't call their stockbroker and say, hey, what is Google trading at today? Oh, $560 a share. Okay, see if you can get it for me for $475. They don't do that. They don't tell the stockbroker, find me an under-market share of stock. I don't know why they think they should approach real estate that way. But your client, the idea that this property over here pays my gym membership and my car payment, this property over here pays for my car payment, and this property over here is my daughter's college fund, that kind of compartmentalized investing is very, very powerful to help you get the kind of patience that you need to just ride out whatever comes. Just take your time. You know, I mean, for example, if sometimes a property goes vacant, okay, even a very closely managed property, sometimes somebody's got to suck up a couple of months of mortgage payments because the tenant leaves and you haven't found him a new one yet, right? Well, if all that means I have to pay my car payment by myself this month, it's like it's easier to swallow when you see something right before your eyes that is being financed by this house over here. It's just did you guys teach them that, or did that come natural to them?
Joe's a numbers guy. He's an engineer. He actually did that himself, although we do advise our clients that same sort of thing.
Yeah, well, I have a chapter in my book called Have a Kid, Buy a Condo. The book is called Crash Boom. And Have a Kid, Buy a Condo is what I did for college funds. I don't worry about my kids' college education. I worry about them getting educated in college. I see what some kids are coming out with these days. They don't have a clue. But I'm planning on telling my kids, hey, look, I got $300,000 sitting over here. I'm going to spend it on college. Do you think you might want to spend a year starting a business, and we'll peel off 50 of it and see if you can get something going? And maybe you'd rather, use the money to launch an entrepreneurial pursuit as opposed to, pouring it away to go party for 4 years. But that's just me getting old and grumpy. Alex, tell us how do you guys make money ongoing? What do you charge for the management of the property?
For the management of our properties for our clients, we charge a 9% management fee. So if, let's say a property rents out for $1,000 a month, we charge $90 every month that it's rented. So if it's not rented, there's obviously no charge. And we charge half of the first month's rent for placing a tenant. And that's really it. We don't view our property management company really as a profit center. It's really, the goal of our property management company is to provide amazing service to our clients, so that they're making the returns that we told them they were going to make, so that they're happy, and then they come back and buy more properties from us, which is, where we make our money.
Right, and the numbers that I've been throwing around of making roughly 10%, that includes the property management fee already being paid.
Absolutely.
So, yeah,
our clients are making very, very consistent 8 to 10% returns after all expenses.
Awesome.
So after
I love
taxes, your insurance, your property management, all that.
I love it. All right, listen, here's how they can find you. JacksonvilleWealthBuilders.com, JacksonvilleWealthBuilders.com, or 904-677-6777. And I will say that at the end of the show again. But Alex Sifakis, thank you very much for being here. I think your business model is fantastic. You're absolutely serving a need that I hear every day. And from all the folks that I've met who are making an attempt of doing this, I think the Jacksonville Wealth Builders are doing it the best. So congratulations on that.
Hey, thanks, man. I really appreciate it, and I appreciate you having me on the show. And it's the same thing back to you. I really appreciate what you're doing, educating everyone on the right way to think about real estate, because, like I know you say all the time, there's a lot of bad information out there.
Yeah. All right, cool, man. Well, between the two of us and the momentum we're creating, I think we'll make a lot of people a lot of money over time.
That's the goal.
Thanks for being here. I appreciate it. Alex Sifakis from Jacksonville Wealth Builders. You're listening to Rand on Real Estate. We got time for a couple of calls when we get back, and if you are on hold, if you want to try to get in before the end of the show, 800-848-WABC. See you in 2 minutes.